Very strong growth, 32% clocked by Phoenix Mills this time around. Let me, in fact, also welcome on board Sunil Subramaniam, market expert, joining us at this hour. Sunil, we were just speaking about Realty as a pack. Any preferences within that pack? Would you play the theme, given the kind of run-up that we've seen even now?
Absolutely. I think that if you look at it over a long period of time, it's been one of the most underperformers, the realty sector. And today, the rise that's happened recently is, I think, a combination of 2-3 factors. One is the continued premiumization that we're observing. Second is the data center related boom, because data center first start off with getting big parcels of good properties there. And the third aspect is, of course, I think the financing side has got a lot easier with REITs now gaining popularity and getting equity taxation status. So there's definitely a wind of getting very low, cheap financing for them. And I think overall, the situation in terms of the fact that I know yesterday we saw a spike with Mr. Trump's induced volatility in the Brent crude. But otherwise, if you see, the monsoon has been progressing well. The El Nino is turning out to be a little bit like the wolf, which ultimately never came. It's not yet seen its effect. The IMD hasn't revised their long-term forecast of 90% long period average. But if you see, the monsoon progress has been pretty good. So on the interest rate front, I think any fears of an RBI rate hike are today on the back foot. So to that extent, I think the combination of a softer RBI policy, the data center related boom and the premiumization are adding to the positivity for the sector. I wouldn't be able to talk about individual stocks.
I understand. Arpit, PSU Banks, that's the other one which is doing fairly well in trade today. Anything changing there structurally? Because it's been one of the underperformers for the last few weeks.
If we see the overall banking space, PSU Banks definitely has underperformed. And looking at the setup-wise also, so far there has been no major reversal on the weekly time frame. So daily there is some bounce back move. But if I look at the setup of the heavyweight SBI, so we'd still like to go with the heavyweight SBI as the overall the stock, the monthly setup is strong. The stock is consolidating the weekly time frame. Some cool off is seen. So level-wise, 1,000 would be important supports. On the upside, 1,060, 1,070 would be level to watch out for. Apart from that, rest of the banks such as Can Bank, BOB still looks weak. So it's better to avoid and stick to the quality names or the momentum riders within the banking space such as mid-cap banks, private banks, and the NBFCs.
Okay, Arpit, we'll let you go on that note. Thank you so much for joining us and giving us those views this afternoon. Viewers, what we'll do is slip in a very short break, come back, continue to take views from our panel, who's going to be with us, Sunil as well as Kunal, on the other side. Welcome back, and you're watching Closing Trades. Thanks for being with us. Kunal, I want to quickly take your view with regard to two listed counters. One is Reliance Industries, the other is Jio Financial. Give us a sense as to how these two look on the charts. We've not seen any meaningful uptick there, even though today we've seen some good action in Bharti. I'm wondering if Reliance, Jio, they're looking good on charts.
Not really. I think they're still looking, more in their own corrective kind of a wave, or maybe a non-correlated wave with respect to the benchmark analysis. Because Reliance, historically also, I think therefore for many, many months, I think had been in a zone where it remains aloof with what happens with the benchmark indices. And whenever we've seen such kind of a zone, it's been more like an extended period for Reliance Industries with respect to the benchmark indices. So I think we are seeing a similar kind of a phase for the stock where you're seeing lack of participation, no buying interest, no major build-up of positions on the stock price. Jio Finance, I think, could be a bit of a surprise because, when I try and compare this with the other NBFC stroke housing finance companies, those stocks have done very well for themselves. You look at, Bajaj Finance, AB Capital, L&T Finance, etc. There are so many plethora of stocks which have been doing very well for themselves. But Jio Finance, I think in that sense, sort of disappointed on the short-term basis. The breakout point which you're waiting for on the geofinance is 245 to 250 levels.
And what's the floor on both of these? Where's the support level?
So for geofinance, 225 is a huge support. This is where I think we tested twice, and for Reliance Industries, that falls up to almost 1240.
Okay.
Okay. Those stocks looking quite okay in trade today, at least. But pharmaceuticals, that's where you're seeing the other, pocket of interest. Sun Pharma holding up 3%, but almost a pair trade happening on a DRL, which is down about almost 8% as we speak right now. Interglobe Aviation has made up half of its losses from yesterday. Remember, yesterday when crude spiked up, you saw the stock fall about almost 5.25% in trade yesterday. But Sudeep, what is... Sunil, wanted your take in on, some of these oil-sensitive plays, aviation, OMCs, paints, and would you say that tread with caution over here, given the volatility one is seeing in crude prices?
On the contrary, I believe that it's a good time to start buying in them. The reason I say is that I know that yesterday this sudden reversal in the war with the thing caused a spike in crude. But you notice that crude has held up. It's not gone past 80 back again. So it's just that nervousness around it. I do believe that the war can't sustain. Yesterday was a blip. I think today's bounce back also shows to some extent that the crude market is not really expecting oil to go back to its levels of 100 plus or 120 and those kind of levels. So I believe that the worst is behind us. You will get these, as long as Mr. Trump is there, you will get these odd days when there will be volatility. But I'm of the view that the kind of correction and the quarterly results are also not going to be great because you're going to have the full quarter full of high crude inputs going into their costs. And so their margins are going to be under pressure. But I would still like to look beyond these negative earnings or bad earnings that may come about and look at it from a medium-term perspective. I believe that given the kind of supply, when the war settles from both Saudi Arabia, you saw the indications on their willing to give massive $11 discounts on oil. UAE has upped its capacity, is going to bring it in. And the world's demand also from a China perspective is going to be soft. So I would generally say that I'm of the view that oil should stabilize at these mid-70s levels for a medium term. And to that extent, any corrections that's happened in these oil-related spaces, I think yesterday's correction was a good time to have bought a little bit. And I would say keep nibbling at that, buy on dips through these oil-sensitive packs is what my suggestion would be.
What about an Interglobe, Sunil? How would you look at it, the risks at this point of time and the way the stock has jumped from that sub 4,000 level where it bottomed? It's a very strong move.
Well, I don't want to talk stock specific. I'm not allowed to do so. But
so,
like I said,
aviation in general, would you be positive?
Aviation, the worst is behind us. Okay. I think that you've got to have, as an investor, look at it as a 6-month minimum perspective. And do you think that this situation is going to last for 6 months going forward? I doubt it. So I would say that as long as these businesses are basically healthy, IFRs have shot up, if you've noticed, right? And it's hard, and they are rationalizing their routes alongside this crisis. So the way they're handling the crisis, the aviation sector, I think is quite good. While consumers are suffering because of the shortage, number of flights have been cancelled and all that, but they are managing their operations fairly well, and governmental supports on the ATF part also has been reasonable. So I would include aviation in that set of oil-related impacted sectors. Well, I believe it's time to start buying on dips.
And what about you, Kunal? How does Interglobe look like on charts?
See, I'll after this recent uptrend, I'll just wait for some more time, maybe to try and wait for some bit of a dip or a correction on the stock, because I think the major part of the momentum in the rally for Interglobe Aviation, I think, has played out. You've seen the stock from 4,400 levels to move towards 5,400 mark, so almost like a 1,200 point rally for Interglobe Aviation. And after yesterday's gap down move and then the price correction, which followed post spike in crude oil prices, you've not seen the stock trying to recover the entire loss yesterday, which means that there could be some bit of residual correction, which could be at play for Interglobe Aviation. So I'll be a bit on a wait and watch mode as of now. I think sub 5,000 levels is where there could be a better risk reward to go for a contra buy.
Okay, sub 5,000 on Interglobe. That seems like the trick or the level to really look out for. In the meantime, look at a Mazgaon today, look at a BDL, BEL. Some of these stocks are seeing a little bit of underperformance. And of course, Cochin Shipyard, we should try and bring up the management bite as well. That ever since its OFS got announced is definitely lukewarm. Today it's also, again, not really going anywhere in trade. Arpit, very quickly, anything on the defense charts? Okay, we seem to have lost that line. But Kunal, anything on the defense charts which is looking interesting to you?
Not really. I think most of the stocks are still going through their own patch of consolidation / price correction. HAL, for example, the stock has been stuck into a trading range between the 4,500 levels, 5,000 mark. Mazgaon Dock is also very similar. BEL, the stock had a move towards 420, 425 very recently, but the stock has gone back into a sharp correction. Even Bharat Dynamics, the stock which moved towards 1,400, 1,450 plus levels, that stock has also ebbed off. So most of these defense names are actually lacking that synchronized price action move. One odd day you have one of the stocks which is up 1-2%, but then most of the other peers are actually down, negative or flattish for themselves. So, and historically we've seen that whenever defense as a sector rallies, it's majority of the stock which tends to participate. So you'll have to wait for that time to try and come by to play momentum. As of now, wait and watch.
What are you most positive on in a market like this, Sunil?
I think that infra play is the one, because I'm an optimist believing that the war will end in a few weeks or months' time. And so the rebuilding of the Gulf infrastructure, I believe Indian companies, especially the larger ones, have a very good shot at getting those contracts to rebuild the damaged infrastructure in the Gulf region of the war. Similarly, in the domestic front also, I expect now with the fiscal pressures easing, I think the government's capex program should be a little bit of coming back on track. And so infra is one play which directly not related to oil, but is a beneficiary of the post-war scenario. So I would say infra is the place where capital goods especially is a place where I think that you can reasonably place your bets with a slightly medium-term approach. That's one. And I'm also a believer in PSU Banks. I know you discussed that with somebody else, but I believe that it's just a matter of bait and handover. You see, 1 year, PSU Banks are up 16%, private sector banks flattish. But 1 month, the story is reversed. So it's a matter of, in the near term, the private sector banks will obviously do well. But I believe in the medium term, along with infra, it's the public sector banks which are going to build a healthy loan book to support that infra cycle. So I would add PSU banks into that infra as a play that I'm very comfortable with.
Kunal, 80 to 90 points shaved off on the index in the last few minutes. What's happening?
Yeah, I think this is expiry-related Sensex expiry move, which has happened because it started off exactly at 3 p.m. Even I was just looking at the kind of slight high volume sell-off, and it's happened across all the larger cap names, etc. So I would sense that this is something which is very similar, which happens on Tuesday when you see the last half an hour price action move. But as of now, nothing major to read.
Okay, that's just a very minuscule move, actually. Nothing as scary and definitely not in contrast to what we saw play out in the market yesterday. But there are some other buzzers as well. Look at Valchand Nagar Industries, for instance. We were chatting with the CEO earlier this morning, Chirag Doshi, and he says that India has adequate uranium reserves to meet the needs of its existing nuclear power plants. He also added that India-Australia uranium partnership only strengthens the country's fuel security outlook for the next 20 to 25 years, but not really a net beneficiary for Valchand Nagar, so to speak. Stock, however, is higher by 7.25%. Let's hear out what he told us.
It doesn't change Valchand Nagar's trajectory at all. I don't think there's any debate that over the next 10 years, 12 years, in any case, new plants were going to be put up. It's not like India's running out of uranium over the next decade. I think what this deal does is it gives a lot more confidence that the Viksit Bharat 2047 plan, where we're talking about 25, 30, 40 years of fuel security, not just the next decade, sort of gets protected to a large extent. And therefore, it's just more of a confidence builder that the long-term story of nuclear energy in this country is sound, and therefore gives that little bit of confidence when you're embarking on an investment mandate of this scale and size. I mean, we're talking about people having to, we're talking about a 1 lakh crore a year opportunity, right? And then that kind of investment requires that all risks be mitigated, of which fuel may be one in the long term. But it doesn't change our trajectory and our pipeline and our order booking that's going to come over the next 2, 3, 4, 5 years. Absolutely not.
Okay, so that's the take coming in. I want to quickly, Kunal, ask you about a few buzzers. One is MapMy India. Stock is up 15% in trade. What's the view there?
So yeah, I think long-term charts are improving for MapMy India. I was looking at the charts. 2200, 2600 was the high in 2024 for the stock. Had fallen down to 800, I think, in the recent price correction. So almost like one-third, two-thirds of price correction for the stock price from those 2400 plus levels in 2024. Very recently, in the last, I think, 2 or 3 months, you've seen multiple high-volume candlestick up move for MapMy India just around this base of 800 levels. So now, which means that we are looking at a point where the stock could probably solidify a base at this 800 mark and start to at least come back into the path of recovery. And this also gels in with the fact that many of the mid-cap names, mid-cap, small-cap names, they are going through a phase of steady recovery backed by strong volumes, base formations on many of the charts. And that's why I would believe that once the market becomes a little bit more stabler than what we've seen at least over the last couple of days, there could be a very high possibility that the risk on appetite, once it comes back, many of these small caps could find further favor for themselves.
Okay, that's where the texture of the market is actually heading in at. Some of the other buzzers in trade today, and some of those capital market plays continue to look higher. Look at Novama today; that's holding up a solid 5.25% as we speak. Sunil, capital markets as a theme continues to be a structural one, you think?
Absolutely. I think the penetration levels of both pure equities as well as mutual funds and insurance is a long way to go. There's a lot more reform lined up on the side from both SEBI and as well as the IRDA side. So I think that overall the capital market story is a structural story, like you said, because as per capita GD rises up, I think, and bank deposits, you're already seeing the pressures that banks are reporting on the deposit mobilization. Clearly, there's a mindset shift in people in terms of more comfort with risk as well as with financial planning for their future. So overall, any play in the capital markets, asset managers, insurance companies, broking companies, the infrastructure companies within the capital markets, all of them, I think, are worth investing in. Valuations do look a bit rich at this point, but if you factor in the future growth prospects, I think it's a good space to play. We have also the biggie in the mutual fund coming out as an IPO in that place, which also give it added energy for the interest in that space.
And Kunal, some of the NBFCs, the likes of an IIFL Finance, that stock's perked up around 5.5% How do you look at that space?
Yeah, this looks as a very interesting space because there are many breakouts, consistent breakouts which are happening, volumes being chased by these names. Trader participation is at the maybe on a higher side because when you see the markets getting back into a stable zone, it's many of these stocks which generally go into a rally, then a price cool off. These stocks, they tend to manage to make a good comeback. And I think we've seen that happening for many of these names. IIFL specifically after this 5% up move, I think has confirmed a cup and handle kind of a pattern on the weekly charts on a line basis. And this probably indicates that we are looking at a potential turnaround of sorts for the stock on the weekly time frame. And this confirms a breakout for the stock of, for IIFL, almost like a 6 months of consolidation and then a recovery for the stock. So we are looking at a point or a possibility that the stock may come back towards a strong multi-week uptrend, which could open up legs towards 600, 650 mark also.
Okay. Do you like any of the NBFCs, Sunil? I mean, I know you can't talk stocks, but the sector as a whole, or the kind of run-up kind of leaves you cautious?
No, caution is always warranted there because ultimately, like I said, RBI policy is a key there because ultimately the interest rate costs spill over there and they are highly market dependent on their borrowing costs, unlike banks which have a CASA. So it's the demand which drives the story. And so far, if you look at both the auto numbers and the consumer durable numbers, they have been healthy on the sales front, which means that they are key there because NBFC-related financing is important. And so the recent numbers, I think, have been pretty good. So I'm confident that they would be able to pass on these higher costs to their through borrowing rates to the customer. So they should be able to manage. NPA levels also look decent. My only concern there is the valuations, which seem to be pretty high there. So I would be a little bit cautious, but my outlook is positive for the sector's growth.
Okay. The other one in focus today is electronics manufacturing. Those stocks are in focus after the government exempted select display, assembly and wireless charging components. Not the assembly itself, just the components from basic customs duty until March of 2029. So there's been an extension of that duty. Move is aimed at lowering import costs, boosting domestic value addition and strengthening India's electronic manufacturing ecosystem. Mithali here with the players and the benefit.
Right, so if you see the EMS sector is buzzing today after the Indian government announced the fresh custom duty exemptions aimed at strengthening the domestic electronics manufacturing. Now the Ministry of Finance has reduced the basic custom duties to nil on selected imported components such as display assembly as well as the wireless charging modules, with the exemption valid till 31st March 2029. Now this matters because the lower custom duties will imply lower input costs, better manufacturing economics, as well as potentially stronger margins for domestic electronics manufacturers. Now, more importantly, it could also encourage the global OEMs to deepen their localization and manufacture a large part of their electronics value chain itself in India. Among the listed players, Dixon Technologies, which stock is in focus today, could be a key beneficiary because given its scale, smartphones as well as the consumer electronics manufacturing. Amber Enterprises could also benefit as it builds an integrated electronics manufacturing platform and also expands its presence in the smartphone ecosystem. Moving now to Kaynes Technology, it may benefit through its exposure to automotive as well as the industrial electronics, while PG Electroplast, it continues to scale up its electronics manufacturing operations. Also, Sirma SGS and Avalon Technologies, they could be the indirect beneficiaries of the broader localization opportunity. So the key takeaway of all of this is that lower input cost, improving manufacturing economics as well as the deeper localization, they all seem to be structurally positive for the India's EMS sector.
Well, EMS and that clearly is one space which is holding out very well. And Sunil, curious to know what is it that you're foreseeing for the entire EMS play, because a severe amount of correction played out, not just up until the March lows, but even before that. And then from those March lows, these stocks have seen a massive recovery. Would you still say that there's value on the table? Because this also seems like a structural theme.
It seems structural, and today is a reaction to the news. But remember one thing, all these component manufacturers are dealing with huge buyers on the other side, Apple, Samsung. And generally what happens is when something is in the public domain in terms of such a cost reduction, they tend to extract value out of it. Apple will go and bargain their prices down. Samsung will put pressure because these are all end of the day, a part of the value chain of supply only. So I would say that this is, while it's structurally good and helps, the problem is, if they sell it in India, it's a different issue. But as long as you're exporting, I think that the pressure from the buyer will make them to again give up a part of these gains to that buyer. So overall, but it should help growth because India-produced components will be cheaper than a China or a Vietnam-produced components. So the business should grow from that perspective, but not entirely everything will translate to the bottom line. So I would still say that today is a base of a news-based rally there. And since you said that the rally has already been happening, you can probably stay invested, but don't take fresh exposure on such news because such regulatorily, vulnerable sectors, I would call them, because they are dependent on these kind of steps to really boost their business. You should always stay a bit cautious on in terms of taking on big exposures to them.
Kunal, we've been discussing the EMS plays, of course, time and again. Today, a big spurt in a Kaynes and Dixon once again. A fresh strategy you think needs to be approached, or the stocks you think in the interim have run up too much?
No, I think there could be a potential further up move for many of these names. In fact, Kaynes, for example, I think today the stock has managed to just about eke a breakout above its 50-day moving average. after a gap of more than 2.5 odd months. More importantly, I think what we are seeing for the stock is a range breakout. It's almost like a 400 to 450 points kind of a range breakout for Keynes Technology. So which means even if the stock goes into a mean reversion, you could look at least another 300 to 400 points at least over the near term. And if the sector goes into a big revival, then we may expect the stock to come back towards its 200 moving average, which is currently placed at 4,500 mark. Dixon Tech, I think the stock confirming a breakout of its 200 moving average today shows signs of a very strong confirmation. And this in sync with the last 2 months of price action move, a higher high, higher low pattern for Dixon Tech, and then a breakout this long-term average, I think indicates that we are looking at a trend building up into the sector. So for traders who have a longer-term kind of a time horizon, I think these could be very attractive bets at the current price juncture.
Okay. What about Swiggy, Kunal?
I think it's a very interesting chart. For example, today the stock confirming a huge breakout above multiple series of patterns. I was looking at the super trend indicator for Swiggy on the weekly, monthly charts. That has confirmed a breakout. I was looking at the volume built up for the stock on the cash levels, of course, and it's a breakout confirmation there. And then in sync with the last 2 days of price action move, I think yesterday the stock fell or corrected from the intraday highs. But when you look at this in conjunction, the last 2-3 days of price action move, it indicates that a major bottom is now in place for Swiggy at 240. So I would sense that this could be a very opportune time for positional traders to enter into the stock.
Sunil, is that your view as well? As ripe as the valuations may be on some of these QCOM and food delivery aggregators, and in the run-up to one of the big IPOs as well, would you still be bullish on this space?
Yes, I would be bullish because they're all discovering new spaces, new markets. It's an entirely, completely different story from the EMS play that I spoke about. So here, it's ultimately a large consumer-oriented business, and India's buying patterns and the way people are doing that are changing rapidly. And so the kind of growth that you can see here is not imaginable. So I would obviously say you have to stay invested in these plays. Yes, not all the stocks that you pick in these plays will do well because there is a winner-take-all syndrome here. There will be massive competitive pressures, so one of them will fall by the wayside. But if you say diversified within the overall space, you will definitely benefit because there is no real past comparison for you to judge the valuations or whatever. So I think that you got to believe in the larger construct of the business, which I think is very, very good. So I would say stay positive and stay diversified within that space.
Okay. Interesting stuff. And, I just want to quickly have your view, Sunil, with regard to IT, because those numbers will start trickling through. Where do you sit on in terms of the argument and what are your expectations broadly from the IT pack this time around?
So first of all, I've shifted IT from my growth part of my portfolio to the value part of my portfolio.
Okay.
Okay, so to the extent that I feel a value is needed, I believe that IT still represents a good investment as long as you are not expecting multiple gains in it from it. A value play, as a dividend play, it's very good. Second is, I do believe also the valuations have overcorrected and there is a space for it to bounce back to a little more reasonable level. So short term, there are opportunities there because the current valuation models are taking off as if after 5 years, these businesses fail to exit, which is not the salvage value, as they say, right? Or the terminal value. So I think that's where the market is overcorrected and overreacted, but that could last for a bit more time. So that's where I'm saying tactically in the short, you want to play, have your stop loss and book profits very clearly and enter and exit. But from a longer term, it's part of the value. Now, from the earnings season itself, if you go by what Accenture said, it's clear that there is pressure that customers are delaying projects. And while they're not canceling contracts, the additional value-added stuff is not coming through. So that is what we will have to wait and watch out for when these bellwethers report, is they will report a good order book and continuance. Guidance from the margins, they could drop it by 1 or 2, I'm not worried. But the point is, are they getting those incremental high margin layer on the products which they used to get earlier? That's the signal that trigger I would wait for to see whether there is some more upside in the future in this. Otherwise, like I said, just stick with IT as a value component in your portfolio. I wouldn't think there's too much harm. There's a tremendous margin of safety there because of the significant level of correction that's happened.
Right, okay. That's the word coming in on some of the technology plays right now in trade. But just looking at how the 9 minutes of trade today are panning out, and it's looking pretty okay, given that we've made it back to that 24,000 mark, testing that time and again on the Nifty futures. But today, had it been for an Axis, a Bajaj Auto, BEL, ICICI Bank performing, perhaps we could have pushed it higher. And yes, IT is going a little lackluster into its earnings. TCS a little bit soft. L&T is well quiet. And Infi is down about almost 1.6% as we speak. Talking about Titan, Sunil, have to talk about the quarterly updates. In addition to that, the move on a Kalyan today. Just wanted to understand, in lieu of where you think gold is headed next, what is the whole take on some of these jewelry retailers and even financiers?
I think given that you're the festival season and the marriage season coming on board, I would be positive on these. Yes, a lot of their business is coming from churning out old gold into new, but that's quite a profitable business for these people because they take a cut on the margins, they charge wastage and do all of that. So their business volume should be good, though gold prices are at a level where mass numbers of people are hesitating to buy new gold, and you saw data come out that people are actually selling gold for cash now to meet other needs, right? But I'm still saying that from a aspirational aspect and from a weddings and festival season aspect, that demand should remain strong. And I believe that the jewelries segment itself should do well. Top line numbers should be good in the coming thing. Gold prices movement itself won't affect them so much because they have got a huge stock of gold, right? And post the duty increase by the government, right? The domestic valuations of all of those has gone up. So I think they are sitting on a lot of inventory profit there, which should cushion them in the coming months. So I'm reasonably positive on the overall jewelry space.
Kunal, some of the gold financiers, Manappuram, Muthoot, how are they looking on charts?
So actually, they are looking very attractive at the current juncture because, I think Manappuram, for example, I think has seen a complete change. There was a point where there was this pair ratio between Manappuram and Muthoot Finance, and Muthoot Finance was way above, Manappuram Finance in terms of ratios. I think when Muthoot Finance was at 4,000 plus levels quite comfortably, a few quarters back, Manappuram Finance was a stock which was tottering at 200, 220, 250 levels. But now there's a complete change of poles. You've seen Manappuram Finance to be at 340 levels, plus minus 10, 15 points for the stock. And Muthoot Finance, on the other hand, has come back towards 3,000, 3,400 kind of a zone. So I think now we are looking at a point where Manappuram Finance has gained quite significant edge with respect to Muthoot Finance. I would sense that this could probably be a very strong indication of a major breakout and a potential uptrend if the stock was been due for the last many, many years.
Okay, let's begin winding up for the day. Sunil, we'll let you go on that note, and Kunal, you too as well. We've done pretty okay for ourselves given the backdrop of where we were same time yesterday. So closing in just around the 24,000 odd level for the Nifty spot and around that mark for the